Jeffrey Young filters it together, this idea of inflation in this hour with the foreign exchange market with Barclays Capital. Jeffrey, your economic team has been one of the resolutely optimistic teams out there. Is inflation part of their call, and what does that mean for your dollar strategy?
Well, we do think that inflation has largely troughed and is moving up throughout the world. There's several factors behind that. Obviously, food and commodities is one. But strong growth that has closed output gaps in much of the emerging markets and narrowed them in some of the developed markets is another factor there. We factor that into the currency forecast in several ways, but the most immediate is what does it mean for interest rates, monetary policy across countries, and how our currency is going to respond to those rate differentials.
Let's look at this chart, and I've got a killer question here for Jeff Young. Our weak dollar policy. Okay, I'm editorializing. Get over it. A real trade-weighted broad dollar, and we've got this long move since 2001, 2002 of weaker dollar. How much of that weak dollar policy is based, Jeff Young, on lower interest rates and on an accommodative Federal Reserve?
Well, I'd say part of it is, but not all of it. You're quite right that the dollar has been on a downtrend since 2002. With the exception of, a couple periods, including 2008. But, for some of that time, the Fed was raising rates, and U.S. rates were, quite a bit higher than elsewhere. It's been one factor, but not the only factor. I think the very large external deficits that we started out with at that period has to also enter the equation. It's sort of a long-term silent killer, but it does make a difference over the long run.
If you have a race to the bottom, and everybody at some point gets restrictive, do you care who gets more restrictive in terms of, inflation worries? We're vigilant. We're all vigilant. It's a group vigilance. Who do you care about?
And I think that's why we do have to realize a couple things. First off is that we're at the very early stages. The ECB's hiked once. It was the first of the major central banks out of the blocks. Everybody else is still stuck pretty much where they were. So, we have a long way to go before we have to start worrying about, that sort of a race at the end phase. At the beginning phase, we've still got rates can go up without really hurting economies that much, which is, I think, why people tend to focus on the differential itself rather than is this really going to materially impact economic growth.
All right, here's Euro Sterling, folks. Let's bring it up. Too much information. Well, the wedding was too much information for me. The wedding saved sterling or something like that. Here's a rate we never look at in the United States, and yet for Simon Kennedy, this is tattooed to his brain over in London. This is that major pair out of London, euro sterling, the number of pounds sterling divided by the euro. Whether this right now, Jeff Young, is an indicator away from us, is this an indicator of Trichet's vigilance?
Well, yes, I think it's also an indicator that the expectations that the market had for the UK really didn't pan out. Several months ago, I think that the market had a pretty decent probability that the Bank of England would have been the first out of the blocks, and that they would have hiked, by last week. Clearly, the ECB jumped the gun, and I think that was probably one of the major factors. We also have some economic data in the UK that have been on the soft side. Some people thinking that the fiscal consolidation really starting to bite now. That has posed a further challenge. On top of that, the President Trichet and the ECB moving first certainly helped that pair out as well.
Let's do this. Let's bring up op-ed one here, folks. Rex, bring up the Greg Mankiw note. I thought this was a really smart note, and this showed that humility from Professor Mankiw. 3 things that he finds mysterious. If you have the answers, tell me. Winston Churchill famously remarked that Americans can always be counted on to do the right thing after they have exhausted all other possibilities. And then Jeff Young, Greg Mankiw goes on to discuss the idea here of when the bond market finally gives up on inflation worries and on the U.S. dollar. When's that going to happen? When do the inflation worries really come in?
Well, I think that part of it is when do the inflation numbers really come in? For all the talk of high commodity prices, which obviously have risen, U.S. inflation remains quite low. It's actually still lower than euro area inflation. And if you take a weighted average of the U.S. trading partners, U.S. inflation is actually still below that. which is fairly remarkable. It's catching up, and that catch-up appeared to have coincided with the move to QE2 last year. So I would say that is working just like sort of the doctor ordered. But in terms of levels, we still have pretty low inflation in the United States.
That's brilliantly put. I like this idea. We still have low inflation. Then why are my viewers miserable? I'm lost here.
Well, inflation is the overall price level. Certainly, not every item is low, and food and gasoline being sort of the most prominent ones that have risen. But if you average it all out, I think you'd have to say that inflation overall is still more or less contained, as the Fed has mentioned. Inflation expectations. Don't really see any signs of breaking out of the range, whether you survey consumers or you look at market measures.
Let's leave it there. Jeff Young, thanks so much.